Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets. We'll start it off with SPY inside bar today. Not surprising when we saw where we were going to open, especially the wide range of yesterday's candlestick and the fact that the FOMC tomorrow is at 2 p.m. Eastern. Market pretty much holding out and waiting with a completely indecisive day. So tomorrow we'll be watching the inside bar with a support of 270.18 and resistance of 271.67. But if the break occurs before the FOMC meeting or before the minutes come out, I'm not going to really put a whole lot of weight into that. Really, everybody's going to be looking to 2 p.m. for when the action occurs. And we're going to see two scenarios. If we get a bullish reaction, this will be our new must-hold level and our higher low because the bulls will follow through off of that support level. If we get a bearish reaction, I'm still looking at this as the must-hold level of 263.76. And that's because we haven't really seen much of a bull bounce here off of this point. We would need to see that follow through for that to be established as a clear support level going forward. So looking at the weekly time frame, the middle Bollinger Band is still holding at this point, third time in the last 4 weeks. And again, it is a scenario where it's the end of the week momentum after the FOMC that's going to dictate where we close relative to that level. DJIA, the Dow, inside bar, very similar. And it's really the same exact thing. It's a much more clear equilibrium pattern here in this instance. And not necessarily, this does not have to be the higher low of 24,453. If that level breaks, the bulls still can maintain in this equilibrium pattern if we do hold this level of 24,217. And again, it's the same reason we haven't really seen much of a bull follow through. Inside bars and sideways trading is not establishing a higher low. As you can see, we just did that and saw a continuation down. So inside bars, we have to wait and see how they break. The weekly time frame is potentially losing its middle Bollinger Band, but you can see it's still very, very tight. This equilibrium pattern on the daily time frame here for the Dow next week, most likely, unless we get a significant reaction to the FOMC. But next week is when we can look for a more clear break, and it's going to pretty much dictate momentum into April for the Dow. So it's going to be a very significant pattern to watch break. IWM has been the strongest inside bar here as well, favoring the bulls just compared to the dip buying yesterday. 155.77 support, 157.02 resistance, nowhere near the must-hold higher low level, and that's not even on the mind of the bulls nor the bears on IWM at this point as it is so strong. The weekly time frame, lower wicks of bulls buying the dip the past couple weeks, all moving averages support, and the psychology of a cup and handle pattern. So if it's a bullish reaction to the FOMC in the markets, look for IWM to make it a headline, make a beeline, what's the saying? It's going to do something and go back to the all-time high. So definitely keep an eye on IWM if it's a bullish reaction. VIX inside bar, again, not surprising with the range that we saw yesterday. 1809 support, 1931 resistance, and we are still in consolidation mode here. Little bit of a bull move. The Bollinger Bands are certainly tight. So we're going to have to see high volume and a close above these Bollinger Bands. Otherwise, we're going to trade in a sideways channel for some time now. Upper wicks on the weekly time frame. Weekly chart really needs a higher low and a higher high to show a change in momentum, as right now we do not have that setup. So I appreciate you tuning in. Tomorrow, FOMC will certainly dictate a lot, and we'll have more coverage after that. Going to be watching the dollar and gold, which is pretty tight, and watching the 10-year Treasury yield, which is in a daily and weekly bull flag, and bulls trying to get that follow through as well. See you soon.